really a pleasure to have you here, Mike, and to share a little bit about your experiences and also highlight a little bit about your experiences as you've developed over the last few years with cross-border investment as well. So
thanks for having me. It's good to be here. I look forward to a few minutes of diving in.
Okay, great. So one of the first things, I don't know how familiar, how many of you in the audience have actually heard of or are familiar with Rothenberg Ventures? That's not bad. Okay, that's 50% of the audience, so that's pretty good. So I think, Mike, you've got a very unique story, and you're also one of the youngest venture capitalists here in Silicon Valley. So you've got a very unique story of the origin of Rothenberg Ventures and how it came about, and just what was the driving force that really kind of brought you to wanting to do this fund, do it the way that you've kind of done it. It's a very unique approach to the market, and I think it's already shown some great dividends. But I'd like to hear just a little bit from the audience today about where it started and just kind of an overview of what Rothenberg Ventures is all about.
Sure. So when somebody starts a company, there should be a pretty compelling reason why they need to do it, why there's a problem to be solved, and why there might be an ability to do it. And a lot of times, I think it's actually it's because something that you want to see exist doesn't exist, and if it did exist, you would probably go work there or support that. So in 2012, what was a little interesting about the seed space, which might still be true now, is that there's an exploding number of companies that have started over the last few years, an order of magnitude more than before, probably at least 10 times more than it used to start, because the cost of starting a company has really plummeted, and then there's also way more money being put into startups, so that has helped it as well. So when there's 10 times more startups and companies don't need as much money, what happens is what used to be a Series A, people used to raise $3 to $10 million just to buy servers and things. Now you can do that in a normal room for $1 million. And so there's a tremendous number of those companies, and the financial backers of them are writing small enough checks where they don't have any time to spend with them. So the startups don't actually just need money. They really need everything, and one of the main things that they need is a network, and they need support, and they need amazing people. But because the barriers to entry plummeted so much, they were not getting that. In fact, they really still aren't. And so the idea would be that it would be possible to build an ecosystem around early stage venture capital, and to do that with primarily with LPs and with the other founders. So one of the unique things about Rothenberg Ventures is that we have 200 LPs, and more than half of them are starters and are actually founders and CEOs themselves. And a lot of the other ones are things like Harvard and Stanford professors of entrepreneurship, super connectors, other venture capitalists, actors, athletes, stuff like that, people who can open doors. And so the thing is, those 200 people actually provide a lot of support to our startups, because I don't think any seed venture firm has the resources to help all of its companies by itself. So we wanted to build an ecosystem. So that's that was the market opportunity, and why Rothenberg Ventures was founded.
Great. So one of the unique components also of Rothenberg Ventures is its very strong emphasis on frontier technology. So that's really been most emphasized in virtual reality. So I think the time, I think in the 80s, 90s, there was a time where virtual reality was very big and people were hoping it was going to be breaking through, but it appears that time may have finally met its moment. Over the last couple of years, there's just been extraordinary progress. And I believe Rothenberg is the most active, if not one of the most, is the most active VR investor in venture capital, co-investor in a bunch of other phenomenal funds. So can you just tell us a little bit more about your guys' strategy on why VR, and then also as you guys have developed into other frontier technologies, what has been the motivating factor in doing that, as opposed to what we see a lot of other maybe software or cloud-based
So we believe that frontier technology is R&D, and mass market adoption. So after a technology starts to work, but before it's ubiquitous, there is a period of hypergrowth. That's like the internet in 1995, that's mobile in 2005, that's virtual reality now. And the reason why that's really interesting is, once again, as a seed firm, we have to figure out where we can be unique. And when you're looking at really large, established venture capital firms, Excels, Graylocks, Sequoias, they're experts, they're deeply well-financed, they have amazing networks. And so, but there is one part of the market that they don't have to care about as much, and it's the ones that aren't yet mature. They really don't have to think about things like virtual reality much, and they really don't empirically until they're bigger markets, because they do such a good job with big established markets to make a lot of money. So the frontier technology area is a place where a seed investment firm could actually win. And I think that if you're going to be a top-notch investor, you have to be contrarian and right. If you do what everyone else does, you're going to get market returns. So if you're going to beat the market, you have to be different, and you also have to be right. So from a it's very hard to do. So from a strategic standpoint, if you could go, at least you could have a strategy around something that the big competitors can't focus on, because there's not tens of billions to be made in frontier tech yet. And in fact, once it becomes that big, then it's not frontier tech anymore. So it's kind of it's like a tautological strategy. It's like we're going to be here as long as it doesn't make sense for all the big boys to be there. So one of the most disappointing things that happened in the history of our firm was calling virtual reality in 2014, saying we were going to make at least 10 investments, making 30, and then months later, everyone else realizing this was a big effing deal. And so we wanted there to be as much of a period of time as possible between when we started making investments and when, I guess, the world knew. And now the whole world knows that virtual reality is a big deal, and there's tens of billions being poured in. And in fact, we thought we had at least until the Oculus and HTC Vive came out, which is probably as early as next month. But a lot of VCs are pouring capital in. There's hundreds of startups. The big tech companies are already acquisitive. It's just outrageous what's happened there. So what happened in late 2014 in our minds is that it started working. So virtual reality has always had a strong promise, and the ability to feel like you're somewhere else, and to be able to do that with software has always been a really valuable idea. But it took a confluence of things to bring the price down and also have it work. The latency had to be low enough when you move your head to be able to recompute what you're seeing in real time, and that was a Moore's law problem. So it was really inevitable that we would get there eventually. But I think the thing that sped that up the most was probably these supercomputers that we have in our pockets. This is an outrageous piece of technology, and it also has things like gyroscopes, and it has screens that are way too powerful. I mean, for a mobile phone, but not too powerful for VR. So the mobile phone industry really accelerated, I think, bringing virtual reality here. And in late 2014, you could for $2, you could get a piece of cardboard from Google and put it on your mobile phone, and you could experience virtual reality. And that is still a really, really big deal. But now there's a lot of other things happening in the ecosystem.
Yeah, that's great. Let's just dive a little bit further into VR. I think we've heard a little bit of talk about it, and I think there's huge applications. We're talking about massive addressable market. This applies to everyone. There's a huge kind of personal computing component there. We could see, depending on how things go, we could see a massive acceleration over the next couple of years. Can you just talk a little bit about the way that you're seeing things, or the way that you can see the next couple of years developing in terms of the market? What are some of the challenges, the hardware side, or people talk about motion sickness or other kind of factors, and also the fundraising component. Where is that? How is that developing? Are the startups getting the traction and the support, follow-on funding? And then also just your ideas. This will be kind of more of a final point, but about what is going to be that handful of breakthrough applications that really kind of totally emerge through this paradigm and make VR completely mainstream. It's already almost there, but I think.
Did I see with the show of hands how many people have tried virtual reality? You have? Yeah, that's really good. Every time I ask that, it goes up, but it's not 100% yet. So, and I think you're more likely to be an early adopter if you're in a place like this too. So if you really hold the world, I shocked if it was, like a percent of people tried it. It's still extremely early on in its development. So there are a lot of questions there, at least 5, I think. What's interesting about the virtual reality market is the technology and the hardware is there. It needs to get a lot better, but it does work. But the content ecosystem is really horrible. It's really non-existent. So you can see these bursts of brilliance and flashes of light with people who create things to show you the potential of VR, but they're too expensive, and a lot of times the computing power is too high, and the way that it's being served is trying to be like wirelessly through this thing and sending free gigs of data, stuff like that. You can see really amazing things, but the content ecosystem, I think, has been waiting to have bigger platforms. So I think the Oculus Vive coming out, the Samsung Gear VR coming down to $99 and stuff like that, was really a motivator for a lot of Hollywood studios and gaming companies and all that who are now spending money on it. So we just have that's all under development, but content will drive adoption, and there aren't really killer applications and content things that I've seen that make people rush out and buy VR. I think it's interesting for people. I think they get intrigued. I think they want to keep trying VR. But I've never seen a 30-minute experience movie, whatever you want to call it. It was like Star Wars or something. There's nothing that's like that amazing that I've seen. If you have one, please tell me. There's like 2 or 3 minute things that are pretty mind blowing. There's games that are pretty addictive. There's applications in healthcare and education that would be wildly effective if they were rolled out to more people. So all of the components are there, but I don't think the whole ecosystem has been built out yet. So the content's a big deal. One of the things you said is, what are some of the big unsolved problems? I do think it's going to be important to be able to untether the hardware. Like when you're wearing a Vive and you have to attach yourself to the computer, or the same thing with the Oculus, it impedes the experience, because I think what's even more interesting about VR in the future is the interactivity component. So being able to be part of it is, you broke the 4th wall, and you're part of the experience now. So that's why it's a little unsettling in VR just to watch what goes on sometimes, because you really are, you feel like you're there. So if you're sitting next to somebody in VR and you look at them, they should probably look at you back and acknowledge you or say hi or something, but it's kind of weird. You're kind of like a ghost right now in most of the experiences, because people don't acknowledge you if you're around. So I think that untethering is a really big deal, and also for kind of where the motion sensing for the mobile experience someone needs to solve that too. Where if I'm in a headset, but it's on my mobile phone, I need to be able to move around, and it needs to know that I'm moving around. So those are actually kind of big problems, and they will be solved. And then the content ecosystem is being built, but I think that the killer apps are something that we're going to see this year, but I wouldn't say I can identify a handful of those right now.
Okay, great. So maybe you could just tell us a little bit. You've got another program. If you could just tell us a little bit about River Accelerator and the other types of technologies that you guys are welcoming in for your upcoming classes.
So the River Accelerator is part of our thesis that the early stage companies don't just need capital; they also need a network. And so the idea is to bring a bunch of companies together physically, and they do come from all around the world, and they do come from a bunch of different types of technologies. That it does attract world-class investors, it attracts world-class co-investors, it attracts world-class partners, corporations, all that. It's worth it for them to go see a group of 10 or 15 curated frontier technology companies at once, where it might be hard for them to see one. So when we say frontier technologies, we still mean virtual reality, we do mean augmented reality, we mean artificial intelligence, we mean drones, robotics, and a whole slew of things that we haven't invested in a whole lot, but we pay attention to. Space and quantum computing, things like that. So those are all technologies that have applications, they're useful, but they're not, we wouldn't say that they're mass market adoption yet, and a lot of times they involve a very hard technical component, which is always an exciting thing to invest in.
Okay, great. Last major question. A lot has been made in the media over the last 3 to 6 months. There's been a temperature change in value and perspective of investors. There's been more caution from the venture side. What have you seen? What are you seeing in the market? And just share with some of our investor audience as well. And also, just in terms of the futures of cross-border investment, we're seeing a lot more activity, also less activity from Asia or China specifically. Love to hear any of your perspectives.
I do think that relatively speaking, people are slowing down the pace of deploying capital, like VCs and possibly even LPs. But it appears to be a little overstated. I mean, I think that if you think globally, I really do believe that there's too much capital chasing too few opportunities just globally, and I think this is just across all asset classes. I really think every expectation should go down. I think that in terms of expected returns, the bars are too high across a lot of different asset classes. But venture capital in particular is really a niche. It's really a tiny part of private equity, and it's as a percent of the global asset allocators, it's very tiny. So it's very sensitive. So if folks decide that they want to go from 2% of their portfolio to 3% in venture capital, it looks like a 50% increase in VC. So it really fluctuates a lot depending on what global LPs are doing. But I do think that we're seeing a lot more capital coming in from China, even now, not less. And even in the U.S., I would say it's more like it's flat rather than down, because it's been growing for so long, as more of the asset allocators have put it in to venture, that even flattening off feels like it's dramatic, even though because there's been so much growth for so long. But I do think also we're seeing a concentration of capital in some companies. So instead of some of the larger VC firms and later stage companies investing in a lot of different companies, we're seeing them do mega rounds, 15 million plus checks and things like that, and concentrating on what they perceive to be the winners. And I think that could have a big implication for a lot of Series A and Series B companies. Because if they're not perceived to be the winners, then that means that they may not be able to have as much success raising rounds, and so that means that they need to turn into real businesses. They need to be dependent on things like revenues and cash flows and profits, and that needs to happen. It should happen anyway. It could be a wake-up call for some companies that aren't running businesses. They're just running companies that are feeding off of venture. So we're grateful to have China involved in Silicon Valley. We've seen a lot of interest there. I think China understood frontier technology before the U.S. did. I went to China about 4 times in the last 6 months, and whenever I spoke in China or met people there, I didn't have to spend any time talking about why frontier technologies were valuable. But in the U.S., I think a lot of times it's been, I feel like it takes a longer time to get there. And so I also think that China would be what was very likely to be the most important virtual reality market too. So I think that a lot of the cross-border things are really important, and I think there's a lot of collaboration that can happen. I think it's already happening, and one of the reasons why I'm excited to be here and partner with F52 is because I think that they're one of the strongest links that we have, and I think I'm grateful that you guys are here listening to this, and I hope to do more with people in this room and with F50. Thank you for having me here.
Great. And how's your Chinese?